time for another review, this time Palantir, ticker symbol PLTR, using Alpha Spread, one of our sponsors, to provide this fantastic information to you. I believe that they provide the best software, and my members, if you are a member of my YouTube channel, always get the best deal, and we're looking forward to a great relationship with Alpha Spread. This is our very first review for Alex, the CEO and owner of Alpha Spread today. So let's get straight into it. I like Palantir. The company's great, but it's not the right time to buy it. Let me explain why. If it's your very first time here, please do click subscribe and ring the bell and give us a thumbs up. A thumbs up always helps the channel and spreads it out. And welcome to all our new viewers who are watching us today for the very first time on Alpha Spread itself. Let's look at why we should buy, or why we should wait to buy Palantir. First of all, if you're not familiar with Palantir, let's just zoom in and give you a bit of information about the company. Palantir Technologies is a holding company which engages in the development of data integration and software solutions. The company is headquartered in Denver, Colorado, and currently employs 2,920 full-time employees. The company went IPO'd in 2020. The firm operates through two segments, commercial and government. The commercial segment serves customers working in non-government industries. The government segment serves customers that are agencies in the United States federal government and non-United States governments. Now, the CEO is often described as the new Elon Musk. Of course, we're talking about the CEO. Let me just bring it up over here. All the information over here. You can see the CEO and co-founder is Alexander C. Karp. The founder and chairman is Peter Andreas Thiel, and he's often described as the new Elon Musk. And people get very excited when Elon Musk gets banded around. It's like, we got to buy this. We need to buy it. It's a great company. We want to buy it. It's exciting. Now, it is exciting, but we need to be absolutely clear. Right now, it's a small company with a huge heart and a huge potential. However, it's being massively overbought right now. Okay, it's had a bit of a hard time getting off the ground. A lot of people are shorting the stock, trying to drive it down. It's now going on to the S&P, which is fantastic. However, we've got to realize it's very easy to overbuy this stock. So it's very easy to get too excited and jump all in and buy the stock. Right now, it's too expensive. As we can see, we had this massive rally the other day on the earnings. The earnings was good. The company is now turning to profit, which is good. If we scroll down here, you can see how the earnings is improving. They beat on earnings. It's good. However, you've got to do your numbers, and that's where Alpha Spread comes in. So I'm going to share with you the numbers now. It's a great company, but really we should only be buying it for around $9. Just like Tesla, everyone gets excited, overbuys it, and before we know it, we've got it 300 or 400% too high, and we've got Elon Musk going, sell the stock, it's too expensive. Right. Let's have a look at the intrinsic value using our Alpha Spread software, which I absolutely love. I think it's better than any other platform out there. Let's go into it. The best case scenario. Are we in a best case right now? No, we're not. We're in a time of high inflation. Yes, rates are coming down. That's fantastic. But at the end of the day, we do see that rates coming down in the spring. So best case scenario, not really. Overvalued by 63%. The base case, if we use the base case, which is what we look at, with 76% overvaluation. Now, as an investor, you've got to buy a stock at the right price. Doesn't matter how good you think it is. If you're overpaying for a stock, you're never going to make any money. The worst case scenario, 82% overvaluation. So you can see whichever way we look at it, it's too expensive. It's too expensive. I have said I would buy it for around about $9. That's where I would like to be in. I've made money scalping it at $14. Yes, but as a long-term investment, I want it for $9. Will it go there again? It could easily go there again. Let's go down and have a look. We can see the Wall Street target is down 24%. Relative value is down 72%. DCF value down 80%. Intrinsic value down 76%. At the price today of $18.94, which is the current price, or where it was earlier. It's gone down since then. Okay, now then. Let's scroll down for some more information and let's do some full analysis on this stock. Okay, valuation history. We don't have a lot of history yet. It's a new company. Current valuation down 76%. Too expensive. All right, let's scroll down here. You can see how the chart is even when it was down here at $6, we were still saying it was overvalued. So it's a great company, great idea. Everything's fantastic, but we have to wait for the right price. Otherwise, you're just buying into FOMO, and you may make money in 5-10 years' time, but you want to be in, at the right time, right? The fundamental analysis. This is very, very important. Looking at the financials now, 2.1 billion revenue. Okay, it's a small company. All right, bigger than me, but it's small. The revenue is going in the right direction. Let's have a look. We were down here first of all. June 29th, 1.7 billion. June 29th. Then we want 1.8 billion. Pretty good. Then we moved up to 1.9 billion on December 30th, 22. Then we moved up to March 30th at 2 billion. We're going in the right direction. June 29th, looking good. Our most recent report was September 29th, 2.1 billion. And now we're estimating 2.3 billion December 30th. Okay, all good. Operating income is 36.3 million. Net income, 147 a million. Okay, we look at the cash flow, operating cash flow. Now the balance sheet. The balance sheet is the most important thing. Now, as we know, we have done reviews on this before, and people have actually told us that they've not actually ever bothered to read the balance sheet. I think 90% of my audience had never actually bothered to read the balance sheet. They just bought it on a YouTube video, on the news, the excitement of a very exciting company. However, the balance sheet tells you the health of the company. It's got 4.2 billion on assets and 1 billion on liability. So clearly we are in the right side of the balance sheet. Looking good. All right, we can see that there. Looking very, very nice indeed. So we're very happy with the balance sheet. That looks good. Now, the efficiency of the company. Efficiency is very, very important, because if we don't have efficiency, doesn't matter how much money we bring in, if we're not efficient with our profits and our margins are good, then we don't have a large moat. We're able to be taken over. We could have all kinds of problems in the future. With Palantir, 79% margin. Very nice indeed. Looking good. Not increasing. It's been about the same, but 75% is a pretty good margin. Operating margin down 8%. Net margin down 20%. FCF margin 10%. You get an idea there. The margins and the health of the business is in a good state. Fundamental score. This is very, very important to give you the information should you buy this company. Well, solvency. So as we knew from the balance sheet, high interest coverage is great. High Altman Z score is great. Short-term solvency is great. Long-term solvency is great. 93% solvency score, very good. You can invest in this knowing it's not going bust anytime soon. However, profitability score 35. It's too expensive right now. Now, it's not red, it's amber. We'd like to see it green, but it will in time come. But right now, the price is too expensive for what you're going to get in return. If it was red, you definitely wouldn't touch it. Amber, it's interesting, but I would still hold back. I think it can sell off. It's too expensive where it is right now. Don't get FOMO'd in. Now, Wall Street targets. Wall Street targets are very, very important. This is how Wall Street analyze this stock. Now, remember, Wall Street don't know how to analyze a stock like Tesla, like Virgin Galactic, like Palantir. They like to see everything in front of them. They like to see everything done for them. They know where the company is going. It's like analysts, Wall Street can't quantify robo-taxis. They can't quantify Optimus for Tesla, because it hasn't happened yet. And they're not investors, they're traders. They're in and out. They're not bothered what Elon Musk thinks is going to happen in years to come. So analysts on a future tech stock like Palantir, they don't know how to value it. So you got to take this with a pinch of salt. So if we look at the Wall Street's highest forecast, they are saying $26.25, 39% upside. If they look at the average, they're saying a 24% downside. Worst case scenario, 73% downside. Now, Wall Street are starting to take the stock more seriously. However, they're not giving it a good rate, which means they're not going to buy into it. They're not going to be backing it right now. So don't expect it to rally and keep on going. This is not GameStop. We're not going to get a short squeeze or something crazy like this with Palantir. Right. This next metric is one I absolutely love. This is what tells me who's buying and who's selling the stock. Who owns the stock right now? Who's buying it? Now, as you can see, over the last 9 to 12 months, we've had some inside trading selling the stock. Now, before you run to the hills and go, this is terrible, they're selling it from the inside, which they are, you need to know how many shares they're selling, because a lot of it, like Virgin Galactic, could simply be automatic tax selling. They're not dumping their stock because they think it's rubbish and it's going bankrupt, because we know it's clearly not. They could just be repositioning, and they've got automatic transactions set up just because that's the way their shares are set up. It doesn't mean to say they're dumping all. Now, if an insider is selling 50% of his allocation, then yes, there's a problem. But if an insider, if the CEO or the chief financial officer is selling 1% of their shares, that's not an issue. That's just them doing the right thing for them personally. However, we can see that over the last 3 to 6 months, it has increased. Because the stock price went up, right? Now we're seeing over the last 0 to 3 months, it's slowed down a bit, but still significant. What's important though is this here. The last transaction was on November the 1st by Moore Alexander, the director, who sold 322,000 shares. Now, I will talk to Alex, the CEO, who's watching me right now as I make this review for Alpha Spread. It would be nice if we had right there what percentage of that person's share allocation that is. So I could click on this and go, Moore Alexander, director, has sold 322,000 shares, which actually is 1% of their allocation. If it said that number, that would be very helpful, I think, to my viewers. If it said 50% of his allocation, of course, that then tells us there's problems at the company. That would be a very, very useful metric. Okay, now some of you are looking at this now who've never seen my show before, and notice that I have it in dark mode. Dark mode is not currently available on Alpha Spread. I have forced it to do this to present it for big screen TV, so you can get this look. You can't have this look if you're just using it on your computer. All right. So let's now go and listen to Yahoo Finance, see what they think, what their opinion is on Palantir.
Of PLTR, as strong demand for its AI platform is giving Palantir a boost on the day. The company's stock and the company saw revenue jump 17% in the third quarter, boosted its outlook for the fourth quarter, now expecting revenue of $599 million to $603 million. Shares ripping to the upside right now by about 19% here on the day.
Now, of course, this was just a couple of days ago. This is a 3-day old video here on Alpha Spread, but now it's selling off. Like I said it would sell off, it's selling off because it's overvalued. Wall Street don't like it enough to hold it long term.
But it's important to remember in context over the course of the
year. They're doing really well. It's up 177% for the year. I mean, that's if you got in on that at the beginning of this year, you're sitting pretty in terms of shares of Palantir. So clearly,
yes, if you bought it at the beginning, yes. If you bought it to around the $4, $5, even $9, it's fine. But that doesn't mean you should be buying it today. I don't think today is a good price at all, hence why it's selling off.
Investors liking both how they performed and their guidance. They talked about this strong interest in AI boot camps. That was something that they talked about in shortening the amount of time of revving up training there, shortening it to days of training within AI because there's so much demand for this new frontier when it comes to this AI story. So anticipating, as you mentioned, revenue.
Not bringing it so far. They're not really bringing anything new to the table that we don't already know. I appreciate what they're doing here at Yahoo Finance, but so far there's not that much information here.
Upwards of 2.2 billion, topping 2.2 billion, expected a little less than that prior. So, again, the demand picture for AI really accretive to Palantir, both in the current quarter, in the quarter gone, and the upcoming quarter.
It's just my guess, but how many people think she's just read that for the first time? She doesn't. I don't think she knows much about Palantir Technologies as a company. Looks like she's reading from a script. But anyway, that's just my opinion. That's just my bit of humor put in there. I like to just, be honest about it.
Yeah, absolutely. And as we continue to think about what Palantir kind of long-term is going to be making sure that they're able to do, especially with the contracts that they have more broadly here, two areas that a lot of investors here keep a close eye on, that commercial revenue and then the government revenue. The commercial revenue, that was up.
A lot of people have been concerned about too much government revenue. Now, that's a big mistake on the stock, and I don't think these two presenters are fully up to speed with the Palantir stock. Actually, one of the benefits to Palantir is, in fact, the government contracts, and they're very much siding with the United States when it comes to defense. And the defense, as we know, in the United States is the largest in the world. And there's a lot more coming down the pipeline for Palantir in relationship to the United States. So United States military. So their involvement in the government actually is a huge potential revenue down the line. There's much more to come with Palantir. We're just at the beginning, but it's still the wrong time to buy it.
23% year over year. Government revenue, that grew 12% year over year. And especially considering some of the ties that Palantir on the deal making side have into different governments, when you have a period of geopolitical tension or conflict like we do right now, it makes it all the more interesting of a business to continue to track how they're navigating many of those relationships. But their customer count, that also did grow 34% year over year, with U.S. commercial customers up and driving that by about 37% year over year.
Yeah, and
so there we go. There's just a bit of information there from Yahoo Finance. Thank you guys for providing that. But I do think that it's the wrong time to buy it. It had a bounce on earnings. The earnings, I have to say, Palantir do provide probably the best. I think Palantir do provide the best earnings, without question about it at all. The way they present their earnings is absolutely phenomenal. I thought, the fact they all come on camera and they even bring in their investors like the Bank of America looks really, really great. Anyway, there is my review and my thoughts on Palantir. What do you think? Are you buying it? Are you holding it? Let me know in your thoughts in the comments below. I'd love to get your thoughts on that. So please do go below this video when it posts. We're making this during a live video at the moment. Go and leave me your thoughts and comments. I would love to get your thoughts on Palantir Technologies. Please do go and share that with me. And I will reply to all of my members' comments. Now, if you are a member of my channel, I do have a referral code, which I will post to my members later on a members-only video, where my members get the best deal on the software. Now, I use it all the time for my stocks. It's how I invest. It's what I look at. But if you want to own it for yourself, my members get an exclusive deal where they get the best price for Alpha Spread. So as always, click above my head for all those links, information. You'll find it all there about Alpha Spread, the links, and all my other sponsors like Sensei Crypto as well. Look below in the description of this video. And for more reviews and more related videos around Palantir, you'll find them over here and down here. Go and check that out. And that's it from me. I just want to say on our very first review for Alpha Spread today, having done the deal as a partner with Alpha Spread. We're very, very proud to team up with Alpha Spread. I believe that they're going to be the best platform online for technical analysis and full background information for a company, giving you the tools that you need to be able to make informed decisions, not just buying random stocks because you hear about it on YouTube. And we're trying to grow the most honest, real, live YouTube channel in the world. And together, I'm very excited to be partnered with Alex, the owner and CEO and founder of Alpha Spread. So good luck, Alex, to you and your team for Alpha Spread. You've got a great product, and I'm very proud to team up with you. Until next time, as always, take care of yourselves and each other.